Well, good morning to everyone. I am Leonardo McClarty, and I'm the president of the Howard County Chamber, and like to welcome you to, as we like to call it, Ask the Experts. And this is where we do our various business seminars on a number of issues that are impacting those in business. We cover a multitude of topics, everything from things that may be marketing related, social media, to cybersecurity, to, as in today's case, commercial real estate, and certainly understanding one of those charges that's often referenced in our leases, but quite honestly, we have the conversation maybe with our broker on the front end as we're looking at space, and then maybe in the midst of moving and everything else that takes place, we probably don't understand it again until we get that bill that sometimes comes maybe in the fall, and we're trying to figure out either why did we get a credit, or better yet, why did we have an increase in charges and so forth. And so certainly today we've got Mark Fisher with Inspire Real Estate that is going to share with us on common area maintenance, and particularly how it's changing as related to COVID-19. Interestingly enough, so much has changed and been impacted by COVID-19 that I guess we could say, why wouldn't our CAM charges and commercial real estate change as well? And so before we continue to move forward, I want to first just recognize our annual partners with the Chamber. And our annual partners are those companies that you see behind me on the virtual background that have supported the Chamber tremendously during this year. And they, again, without them, certainly we would not be able to accomplish all that we're able to accomplish here with the Howard County Chamber. And so, again, just want to recognize and acknowledge them. And so next, what we're going to do, and I know this may not be the norm in some of these virtual meetings, but I think we've got a manageable enough group that, and I think it will further help Mark just know who's represented and perhaps what it is that you do as he makes his comments and presentations, that we're going to actually do some introductions today, get a chance to know one another over this next hour. And so what I'll do to make it easy so that no one has to figure out when it's their turn and so forth, I'll just call you by name, and that will, again, make things easy. And so if you could state, perhaps maybe two things, I would say, well, maybe three, your name, the company you work with, and what you do. But perhaps if there's a specific question or something that you want to get covered today that you wanted to ask Mark, or that you hope he'll touch on. And so with that, I'm going to actually start here and just maybe go alphabetically and start with Sherry. And so Sherry, if you would please just introduce yourself, the company you're representing, and what you do there, and if there's anything specifically you want to know today. So Sherry. Okay, I'll maybe come back to Cherry a little bit later here. So maybe next we'll go to Krista Hickman.
Hi, thank you. So my name is Krista Hickman. I'm a principal, a CPA with Katz Avash in Timonium. And I'm on the session today just to find out more information that I can impart to my clients. I work with clients in the construction sector.
Excellent. Thank you. Next, we'll go to Sarah Benson.
Hi, my name is Sarah. I'm with EOS Outdoor Services, and I represent the commercial landscaping portion of our business. So obviously we work a lot with property managers, and I'm always just trying to keep up with what's happening with all of the changes, and just wondering how we'll be able to continue to work safely with property management companies on commercial sites.
Excellent. Thank you, Sarah. And then next, I have someone with the phone number of 443-351. I'm sorry, 443-518-7704. So if you would please introduce yourself.
Yes, so this is Sherry.
Okay, got it.
I work for the Association of Community Services and manage the nonprofit collaborative in Howard County. And so we're kind of on the receiving end of those common area maintenance fees and trying to get a sense of what to expect going forward.
Certainly can understand that. Thank you. And the rest actually are members of the chamber team that we have with us right now, and Ronnie Nadeev, who's Director of Membership, Taylor Tarleton, who handles our events, and Lynn Song, who is in operations with the chamber, and who certainly I think will probably benefit from this presentation as much as I will. And so from there, I am now going to prepare and introduce. Actually, we've got one other coming in the meeting. And so before I go and introduce Mark, I'm going to actually ask if, I think this is Marty that's coming in from Image 360. If you would, Marty, just introduce yourself to the group, as well as state if there's anything specifically that you would like to learn in today's presentation. Let's see here. Hey, Marty. Okay, maybe we're having some technical difficulty, but we'll just get started. So, as I mentioned earlier, we're really fortunate in the chamber to have a lot of great business owners and so forth that are able to come with us with a widespread of expertise and so forth. And so today, our featured speaker is Mark Fisher with Inspire Real Estate Services. And Mark is nationally recognized as an innovative and dynamic leader in the commercial real estate industry. For over 25 years, he's excelled at building and leading large and diverse real estate organizations that serve some of the most discriminating institutional investors. Mark founded Inspire to provide legendary services to clients in a complex world that is constantly changing. His firm is committed to helping their clients, both investors as well as the occupiers of commercial real estate, to understand and navigate the intricacies of real estate decision making. Inspire develops enduring client relationships built on quality service, collaboration, and trust, and they deliver integrated commercial real estate services that leverage their unique insight and foresight, sound market research, and relevant knowledge. And in addition to him being an accomplished author and sought after speaker and a talented instructor, he enjoys igniting a passion to others to become the best and brightest talent in the real estate industry. Also, what's not noted here is Mark is someone that is very passionate about public education and workforce development, and that is something else that he also works in as well, and has been active in a number of groups that ultimately deal with, again, educating and helping the next generation to move forward in their academic achievement. And so with that, Mark Fisher, the screen is yours.
Thank you. And great to get introduced to everybody. I think that'll help me to tailor this a little differently. So we'll move around a little differently than what the original layout is, because I know a little bit more about the people who are on the call.
And Mark, I'm going to interrupt you 1 second. We did have two other people that I want to give the opportunity to introduce themselves. Just 1 second. And so one is Ernie Tompkins. So Ernie, if you would just introduce yourself, just state, your name and who you're with, and if there's any one or two things you'd like to get out of today's presentation. Hold on 1 second. Let me just need to unmute. There
Sorry.
you go.
Yes, Ernie Tompkins, CMIT Solutions. We do network and cybersecurity, data protection. I don't have anything in particular I'm looking to get out of this. I know I'm going to learn something, but nothing specific. All
right. Excellent. Excellent. Thank you. And then next we have Image 360.
Good morning. This is Marty from Image 360. We're a signage company, and obviously COVID has impacted our business, and we're looking to see how it's impacted other businesses as well.
All right. Excellent. So Mark, now the floor is back yours.
Awesome. So I think we started talking about COVID with my clients back in the middle of January before it was really a big deal. We really focused on what do we need to be thinking about? How do we need to start preparing just in case this thing arrives? And since that first discussion with clients, we've really tried to be out in front, not necessarily thinking about what everybody else is thinking, but trying to figure out what the next thing is. And on my radar screen, the next thing coming up, everybody's talking about reoccupancy and how do we open buildings and get tenants back in the building. That has been discussed ad nauseum, but the next big thing in my mind is operating expenses, because we've got some really unusual things happening that are unprecedented, and we're using the term unprecedented, but it truly is unprecedented. So we're trying to figure out how to help clients work through the complexities of operating expense calculations for 2020 and beyond, because this COVID-19 is going to have an impact. So I think the idea behind this is to kind of be ahead of the curve, so to get people to start thinking about operating expenses, start talking to their property management companies or their landlords, and start understanding how the landlord is approaching operating expenses, because it could have a significant financial implication, both in terms of your bill for next year, as well as for, if you're in certain situations, it will have an impact on the rest of the payments that you pay for the rest of your lease term. So the first slide I'll show you is, this is what the 2020 budgets look like right now. Property managers have really basically just torn the budgets up, because whatever was developed in 2019 for a 2020 budget, it is completely and totally out of the window right now. There is no.
Excuse me, Mark, did you have a slide you were showing?
Yeah, hang on a second. So
Okay.
I thought I had shared this. Give me a second. How about that?
Okay, yeah, there we go.
So this is the 2020 budget package. So the property managers finished this and got this approved by the landlord or the asset manager, and that we expected that throughout the year this was going to be a pretty stable year, and then COVID happened. So the budget that was prepared in 2019 has no bearing whatsoever to what's actually happening in real time today. So part of the focus for us is to understand what the implications are for occupants of real estate, and to get people to start thinking about what concerns are coming up on the horizon. So to talk about, this is a little bit of semantics, but the landlord is going to set up a system where they recover the operating expenses for the building. And the operating expenses are the costs associated with operating and managing the building, plus insurance, plus real estate taxes. So no matter what kind of lease you have, there is going to be a structure where the landlord gets reimbursed for the costs of operating the building. We use the term CAM charges a lot. CAM stands for Common Area Maintenance, and a CAM charge is really based on only industrial and retail properties where the landlord is responsible for anything outside of the space. So in a retail shopping center, the landlord's responsible for asphalt and concrete and exterior lighting and landscaping and snow removal, but they're not usually responsible for HVAC and tenant electric and cleaning inside of the tenant spaces. They're responsible for common areas. So when we talk about these expense pass-throughs, in industrial and retail properties, we call them common area maintenance, or CAM expenses. The technical term for office properties is operating expense pass-throughs. And you'll still hear property managers talk about CAM charges, but to be technically correct, it's not a CAM charge in an office building, it's an operating expense pass-through. The idea is that whatever the costs are of operating the building, the landlord passes them through to the tenant, and the tenant's responsible for paying in some way, shape, or form their prorated share or pro rata share of the expenses in the building. In order to understand how the operating expense pass-through works, it's helpful to think about the lease structure in terms of two pieces. No matter what kind of tenant you are, no matter what lease you have, everybody pays rent based on two components. We just talked a second ago about the operating expense component, And that's the part that covers the operating expenses of the building. But there's also a base rent component that covers the landlord's profit, covers the debt service, any major capital improvements, any overhead, any non-operating expenses. That's the landlord's piece to pay their bills and to hopefully make a financial return. So there's a base rent component and an operating expense component. Depending upon the type of lease that you have, those components are managed a little bit differently. Sounds like most folks on the call are office tenants. So in an office environment, they're usually what's called a gross lease, and the rental rate that you pay includes the base rent component and the operating expense component in the same number. And I'll show you in a second what that looks like. Because the operating expense component is included in the rental rate, the tenant is responsible for paying the increase of operating expenses over a base year. And again, we'll talk about that more in a second. So the gross lease is basically going to be that there's a larger number that the tenant pays up front, but they pay an increase over a base year from that point forward. A net lease is what's more common in industrial buildings and retail buildings. In that case, they pay the base rent component by itself, and then they get billed for the operating expense component, which is the tenant's pro rata share of the operating expenses. There's no base year for that. Here's an example of how that looks, and we'll put some numbers on it. So you'll notice on the screen that there's on the left-hand side is a representation of a gross lease. Notice that the gross lease tenant is going to pay $35 per square foot. That's what's going to show up in their lease as their rental rate. And that's also going to be what the tenant is responsible for in terms of their invoice. So their monthly invoice arrives and it shows $35. We often think of that as just $35, but in reality, it's easier to understand if you break it into two pieces. And you think about that $35 as being $23 toward the landlord's base rent component, and $12 is to reimburse the landlord for the operating expenses at the building. So that $35 total that the tenant pays has two numbers baked into it, the base rent component and the operating expense component. So for our assumptions, we're going to assume that the operating expenses for this particular building is $12 a square foot, and whatever's left over becomes the base rent component. If that same tenant was being billed under a net lease, the tenant would actually get billed $23 per square foot because the net lease is net of or with the operating expense component backed out. And then they would get a separate bill for $12 a square foot for the operating expense piece. Over the course of the year, the landlord is going to bill the tenant usually 12 equal payments based upon the projections of what the operating expense pass-throughs are actually going to be. So in this particular case, over the course of the year, this tenant paid a total of $15,036 to the landlord as part of their base rent. And at the end of the year, we do an operating expense true-up or a reconciliation to compare what we budgeted the pass-through to be and what the actual pass-through to tenants was. In this particular case, the tenant was billed less than the amount that's actually due. So the tenant's going to ultimately owe $2,165 because there was an underpayment. And the same thing happens in reverse, which is if we overbill the payment, let's say that we billed the tenant $15,000 and the actual bill would have been a little bit less. In this case, we would owe the tenant back $38. So regardless of how we structure it, generally speaking, the landlord is going to bill the tenant 12 even payments over the course of the year to prepay those operating expense expectations for next year. And in the first quarter of the next year, we'll true that up to figure out whether we overbilled or underbilled the tenant. So generally speaking, you're going to be paying something over this year, 12 payments. And usually within the first 3 months of the following year, the landlord is obligated to do a reconciliation of the operating expenses and tell you how they came in versus the budget. So it could be that you owe the landlord something, it could be the landlord owes you something, but the reason for that is because you're paying in this amount. Well, let's talk about the gross lease and let's understand how this really works. So remember we said in a gross lease, we're going to be paying a $35 rent. Well, that $35 includes $12 towards the base rent, towards the operating expense component, which means that $12 becomes what's called a base year. So in that first year, the tenant pays $35, and $12 of that 35 becomes the tenant's base year, and it covers the operating expense component. Let's say that in year 2, the expenses went up, and they went up by 24 cents a square foot. The tenant is going to be billed the expenses are going to be $12.24 a square foot. The base year was $12, so the tenant's obligation is now 24 cents. So they'll actually pay based on 24 cents per square foot. And then that carries out throughout. So you'll notice in year 3, we expect the expenses to be $12.48. The base year was $12. The difference is 48 cents, and it marches its way through. The key concept with the gross lease is that from an operating expense standpoint, the tenant is paying to the landlord the increase of the expenses over that $12 base year. Since no one on the call is focused on net leases, we'll skip over that, and we'll talk about the impact of these things and where we expect COVID-19 to have an impact on operating expenses. Things that there are going to be many different opportunities for the expenses to go up, go down, stay the same. There's all kinds of things that could happen. It really depends on so many factors beyond what we can talk about on the call. But generally speaking, we expect that over the course of 2020, the COVID-related cleaning costs are going to increase. So your building owner may have brought in special cleaning companies to apply sanitizer or to deep clean the buildings. Somebody's got to pay for that. So it's likely that that is going to be a pass-through to the tenants. If it's pass-through, if it's a general cleaning that occurred for the entire building, expect that the landlord is going to pass that through to all of the tenants evenly. If it is perhaps one of the tenants had a positive COVID case and the company came in to deep clean that tenant section, it's probably going to be billed back to just that tenant in particular, but there's no guarantee for it. Remember, we're in unprecedented territory. So this is a really good thing. If you are, we'll talk a little later on in the program about it, but this is the kind of stuff that you should be talking with your landlord now to understand what are they spending and how are they planning to pass it through. If they're doing deep cleaning in the building, that's great, and it's a great thing for public health, but somebody's got to pay for it. So just be aware that's in the mix. The second piece is that there's going to be additional janitorial costs because buildings that are back open and operational now are paying additional janitorial staff in many cases to do high touch point cleaning. So there are going to be additional day porters, for example, going through the building and applying disinfectant in different areas. That's an additional cost above and beyond the janitorial base cost. Chances are good that that's going to be passed through as well. And then if you've been back to work, you probably have noticed many landlords have signage, they've bought lucite partitions, there's additional hand sanitizer, there's other COVID-related things that are occurring at the building, and those expenses are not going to be in the budget. Those are going to be additional expenses above and beyond. So keep in mind that there's a whole segment of expenses that are related to COVID in a very direct way that are going to disappear or that weren't in the budget that are going to appear in this year's budget. There are other expenses that are going to be likely that they're going to decrease. And a lot of expenses in your building are tied to occupancy, so the number of people in the building at a particular time. We expect that because even if you're going back to work now, we've had 3 or 4 months where you haven't been at work, we expect the trash removal charges to be very low compared to budget. We expect the janitorial charges to be lower because either the janitors have not been in the building or they've been in the building in a reduced capacity for regular cleaning. There's no reason to send cleaners in the building to empty trash cans and to do the cleaning that they would normally do on an evening if the building was completely empty. And then the other thing is that utilities are expected to be much, much lower. Even those buildings that ran HVAC around the clock, that's great because we needed the ventilation to be able to keep the building safe. But remember that there's no laptops, there's no computers, there's no lighting. The HVAC load is much lower because there are fewer people in the building, if at all. So the utility costs are going to be dramatically lower than expectations. So those are things that you're going to expect that the utilities and those other things are going to reduce your operating expense liabilities. There are then going to be things that stay the same. So for example, service contracts. If you have a service contract on an elevator, the service contract is not based on a variable cost, it's a fixed cost. So that's not going to change. The service contract is still going to be the same. The building engineering team hopefully was still on site doing proactive maintenance, because maintenance doesn't stop just because the building was unoccupied or occupancy was reduced. And things like landscaping, real estate taxes, all of those things are not going to change at all. So when the tax bills went out on July 1st of this year, the tax bills didn't change because of COVID. They're going to be the same. Then there's a whole category of expenses that it just depends. So management fees, for example. Management fees usually are driven based on the amount of money that tenants pay in. So the property management companies charge a percentage of income. If all of the tenants continued to pay rent over the course of the area of non-occupancy, then the management fees will remain unchanged. But if tenants have stopped paying rent, like many retail centers, if tenants have stopped paying rent, the management fees are going to be artificially lower right now. And keep in mind that this is important for gross lease tenants. If let's say the company defers paying rent for a period of time and you have major rent discrepancies in 2020, and the tenant puts a payment plan in place and pays those rental amounts in 2021. In most cases, your property owners are doing operating expense reconciliations on a cash basis. So if those rents are paid in 2021 for time in the space in 2020, your management fees are going to be low in 2020 and artificially high in 2021. That has an impact on you if you have a base year. So we'll talk about the base year and what happens and gross ups and that kind of stuff. But just keep in mind, it's not just the fact that the management fees are going to be lower, it will have an impact on the way those fees are passed through to you as a tenant. Same thing with the management and maintenance staff. Some companies laid off their maintenance staff or laid off parts of their staff because they didn't need all of the maintenance team. You're likely to see that expense may be reduced, or some companies kept them on site. What do you do for a company that got a PPP loan? So in theory, the company was reimbursed for the cost of that maintenance staff and the management office staff. They didn't actually, their net for that was zero. Well, how does the PPP loan impact operating expenses at a building? Does the landlord still get to charge you as a tenant because they paid the management and maintenance staff at your building? Or do they not get to charge you because they paid them using PPP funds? That's a big question. And again, this is unprecedented. We've not had a situation where we've had to deal with this. So it depends. Property insurance. Probably in the short term, property insurance will stay relatively stable because a lot of companies have insurance policies that last a year and they're not going to increase or decrease or change until the renewal date. But potentially because of the liability of COVID, the property insurance could go up higher in future years. So that could have an impact on operating expenses. Same with security guards. Some buildings laid off their security guard staff or reduced the staffing. Some buildings added security guards because there weren't many tenants in the building. So that could go either way. That could be a reduced expense or it could be an increased expense. And then general and administrative expenses like office expenses and things. With companies working from home, the management office pass-through expenses are probably going to be lower than they would in a normal year because companies aren't buying things that they would normally buy for the management office. But what happens to that property manager who's now working from home, who needed to buy a printer or printing paper or office supplies? Do those expenses actually go up because now those managers who formerly worked on site are actually working from home and the company bought equipment to allow them to do that? Well, if those managers are assigned to your building, generally those overhead expenses are passed through to the tenants in the building. So you could get billed theoretically for the property manager's home office setup, the property manager's printer, the new laptop, the new monitors, new whatever, to allow that person to work remotely. So not to say that every company is going to approach it that way, but just keep in the back of your mind that there's uncharted territory here, and there's a lot of ways that these expenses could be managed. And there's not going to be language in your lease agreement that specifically tells you how these things should be managed. So it's really going to be a discussion with your landlord to figure out what the best alternative is. So why does this matter to anybody on the call? Well, first of all, it's a good idea to understand by talking with your property manager what the impact is and how they plan to treat these expenses. Because recognize that in the first quarter of 2021, you're going to get a bill from your property manager. It's either going to be that they underbilled you for the year and they're going to send you a bill, or they're going to say that the other way around. They underbilled you for the year and they're going to send you a bill, or they say that they've overbilled you and they're going to give you a check back, or they're going to give you a credit. But with companies struggling today to just make ends meet, it would be great if you could know ahead of time that you were going to get a check back. And maybe you could negotiate with your landlord to reduce the prepayments for the rest of the year, so that it would be better for you to use the cash over the next 6 months than it would be for you to get a check back in March of 2021. At the same time, if it's an increase in expenses that's anticipated, you can also then start paying more as prepayments for the rest of this year, so that you're not going to get hit with a big bill in the first quarter of 2021. So this is a great time to ask the property manager to talk with you about how they plan to pass things through, what they plan to pass through, what's their plan. And I will tell you that if the manager says we have no idea, that's probably not accurate, because I don't know an asset manager anywhere in the country that's not asking the property managers to revise and reforecast their budgets based on COVID-19's impact. There's not going to be very many landlords out there who just truly don't know what it's going to be. They have revised the budgets. They've put together different pro forma opportunities. They have played around with the numbers. They have a good sense of what this is going to look like. So, and again, I think the key point here is communications, and it really is to know now how the landlord plans to pass things through, COVID-related things through. But it's also a good idea to maybe you can impact the decision-making. So if the landlord says, well, I'm thinking about passing it through this way, you may have the ability to say, well, wait a minute, did we really think about that all the way through? Because there's other issues that need to be resolved or discussed. This gives you a chance to take 6 months to get in front of the landlord and understand what their plan is, and maybe even help them think through all of the other ramifications of passing through expenses. Here's where this really matters. And in terms of a gross lease, remember we said in the earlier examples that the $12 of that 35 was the operating expense component, and that went against the base year. There's two issues that come up. One is, if 2020 is your base year, based on what we talked about earlier, the operating expenses are likely to be lower than they would be in a normal year. So remember, we're thinking $35, it's 23 and 12 towards operating expenses. Well, what if the expenses are really 11 or 10.50? Well, you still pay $35, but now your operating expense base year is going to be established lower than what it should be. And from this point forward, when the expenses go back to normal, you're going to be paying an artificially inflated operating expense proration above that base year. And the same thing, even if it's not your base year, the expenses are going to be different in 2020. So it's not going to be apples to apples. It's not going to be a fair comparison between your base year and the actual expenses. So there's a concept called grossing up, and that's really where I think people should be paying attention, because there really is an opportunity for tenants to get burned in this situation. Now, I want to step back for a second too, and let's talk about a couple of things before we go into the math of how gross ups work. There are a couple of really significant concerns associated with COVID-19. One of them is it's not something we've had to consider in the past. So generally, I've never seen a lease that addresses any of the things that we're about to talk about. The lease didn't anticipate this. There's a difference also between space that is leased and occupied. And as we talk about what gross up means, gross up is generally restricted to the word leased. So if the leasing falls below a certain level, the gross up clause applies. However, your building could be 100% leased. But if for 6 months of the year, there's no tenant working in the building, it's 100% leased, but probably 50% occupied. Well, all of those variable expenses will apply because those expenses aren't being paid at the property level. But because of the language of your lease, you didn't trigger a gross up calculation because the gross up is triggered based on leased, and the space is 100% leased. There's also some other parameters of the lease of grossing up and base years, and how do you manage base years going forward, and what happens if you add expenses or reduce expenses after the base year has been established. And the leases are generally silent about those things. So I'm going to just state before we get into the next couple of slides that my philosophy is that we need to do something that's fair. And I've been in the business for 30 years, and I've lived my life on treating everybody fairly. Fairly may not be the requirements of your lease agreement. And your lease agreement probably favors the landlord, and probably, if applied by the actual language of the lease agreement, it may not be fair to you as a tenant, but it may be legal according to what the lease agreement is. So I think there's certainly a need to talk with your accountant, talk with your attorney, talk with a property management pro, talk to folks about it, but recognize that there may be, in black and white, no opportunity for you to negotiate this. I think we're at a place where, you know, the whole commercial real estate world has been turned upside down. Hopefully your landlord will be willing to sit down and negotiate with you in terms of fairness and not necessarily what the lease says. This is a hopefully once in a lifetime experience. Hopefully we're never going to have to deal with this again, but recognize that there's a difference between the fair way to do this and what may be called for in your lease. And unfortunately, what may be in your lease is not necessarily fair. So when we talk about these gross leases, there is a concept called gross up. And the basic premise of gross ups is to make sure that we compare apples to apples from the base year and subsequent years, so that we treat everyone fairly. The concept is that if the leasing level falls below some sort of a threshold, and let's say it's 95%, because that's a pretty common number, then we have to do a gross up calculation to presume that the building was 95% leased. Here's why that really applies. Let's say that you move into a brand new building, and let's say that the building you're the first tenant in the building, and you're going to be there by yourself for 6 months. Well, remember that scenario we talked about earlier. We think the expenses are about $12 per square foot. Well, they're not going to be $12 in the first year, because not only do you have lower occupancy and lower leasing in the building, but all of the building systems are under the manufacturer and the installer's contracts and warranties. So the elevator contractor is not billing the tenant or billing the landlord for the elevator service contract, because that first year is under warranty. Any repairs or maintenance on those systems are not being passed through because they're covered under warranty. There's very little repair that has to occur in that first year. So for a lot of reasons, not just occupancy related, but for a lot of reasons, the expenses in year one of a building are going to be artificially low. If you establish your base year based upon the actual operating expenses of year one, when you're the only tenant in the building, and we know that all of the other expenses are going to be substantially lower artificially, that's not fair. So the landlord will still charge $35, but let's say the expenses are really, the actual expenses are $8 a square foot. Well, that would establish your base year at $8. And when the building is fully leased and the expenses are around $12, you would pay $4 extra in terms of the operating expenses. That's not fair. So the gross up is important when you're calculating a base year to make sure that we're treating it fairly, but it's also important throughout the term of the lease, because let's say that you established a base year in a year when the building was full, and as we work our way forward, a major tenant moves out and the leasing falls below a certain threshold. Well, that's not fair either, because you're paying based on your base year and the actual expenses of the building are lower than that. So we have to find some way to treat both the landlord and the tenant fairly, and that's where gross up comes into play. Here's an example of what a gross up might look like. And you'll notice in the first year, we're establishing a base year for this particular tenant, and the occupancy was lower than expected. We think the market for operating expenses is about $12 a square foot. So the dotted line represents $12. So in that first year, we have to calculate what the difference is between the actual expenses represented in blue and the base year as if the building were occupied at the level that's required. So in this case, we're going to artificially increase the expenses to $12, and we're going to establish the tenant's base year at $12, even though we didn't spend $12 per square foot that year. That, again, this only applies in a gross lease, because in a gross lease, we're splitting that base rent component and the operating expense component. In year 2, the building still wasn't fully occupied, but we had more expenses and we were closer to normal. Now we had to gross up a little bit, and you'll notice the expenses are just a little bit higher than $12 because we have to gross up to what the expenses would be in year 2, not gross up to $12. We have to gross up to what they would be in year 2. So those expenses are going to increase a little bit, and if it was $12 in year 1, it's probably 2.5 or 2 or 3% more in year 2. So you're going to see the gross up is a little higher. In year 3, we had full occupancy in the building, so these are the actual expenses. There's no gross up. Same with year 4. But in year 5, a tenant moved out of the space, and we needed to do a gross up in that year because the occupancy fell below that 95% threshold. Well, you can see we have to gross that up a little bit to be fair for everybody. This can be impactful for you as a tenant in this base year, because if the base year gets messed up, that has an impact on you for the rest of time. It could also be impactful for you if the building occupancy falls below a certain threshold, because the tenant could potentially, the landlord could potentially be hurt in that situation where the tenant's payments are going to be much reduced, even though the landlord's obligation was still there. So this is really about fairness. In some of the scenarios we've talked about, the tenant would benefit from having the gross up. In other scenarios, the landlord would benefit. The key is that it treats everybody fairly. So the concept would be that we need to do these gross ups, and that's where it's going to become complicated. I also think, just to illustrate this maybe a little bit differently, if we didn't do the gross up and we established that in this first year the actual expenses were $10, the tenant would pay, the base year would be $10. So that $35 now would actually be $25 towards the base rent component, and it would be $10 towards the operating expense component. Well, that means in year 2, let's say the expenses were $11.50. The tenant would then pay their pro rata share of $1.50 a square foot. That's a huge increase. So because we've established this base year artificially low, when we bill the tenant the next year based on $11.50 a square foot, they're going to actually pay $1.50 extra. And let's say this is $12.50 a square foot. Well, the base year is artificially low. They would pay $2.50 more per square foot in year 3, and so on. So getting this base year right is absolutely critical, because this sets the foundation of the operating expense pass-throughs all the way through the rest of the lease. So this is why this is such a big deal. And you really do have the opportunity, especially if this is your base year, to be treated unfairly in the leasing process. So here are some things you can be thinking about now. One is that you want to ask your property manager how they're going to pass through the COVID-related expenses. And it's okay to ask for backup. It's okay to ask for details. It's okay to ask for what's their plan as buildings start to reopen and people start to come back to work. What other expenses do they expect for the year? How did their budget change for the year? It's okay to ask for details. Some property managers may not release it to you, but the professional ones are going to do it, because there's a lot of question marks in everybody's mind about this. Ask the property manager to recalculate your operating expense liabilities for 2020 so that you know whether you're going to be due at least under the preliminary numbers, if you're going to be due a check back in the first quarter of 2021, or if you're expected to write a check. And it gives you a chance to potentially revise your billing over the next 6 months so that it's not a surprise for you in the spring. If you go to your landlord and you talk about rent concessions, being able to think about this in terms of the base rent component and the operating expense component may give you a little bit more knowledge and a little bit more ammunition in terms of your negotiating for a rent concession. So again, if you're paying $35 a square foot, if you just go in and start trying to negotiate based on the $35 total rent, the landlord may be a little bit more challenging. But if you go into that situation knowing that the base rent component and the operating expense component are different, you may be able to negotiate a better deal by looking at them separately. So for example, if the operating expenses at the building are going to go down, I might be able to negotiate a reduction in the operating expense component of the pass-through. That protects the landlord's ability to continue to pay the debt service on the property, for example. Or the opposite. Hey, I can reimburse you for your operating expenses, and I'll make sure that you have enough reimbursement to pay the debt service, but what I'm asking for is a reduction in your financial return for this year. And that's how I'm approaching this rent concession. Depending upon your landlord, it may be a better idea to separate that and negotiate these as two different pieces. And it depends on whether you want to approach the landlord and reimburse for the operating expense component so they don't lose anything on the operating expenses, or whether you want to ask them to take a haircut on the base rent component, which would affect their profitability. And if you dig too deep and cut too deep there, it would affect their ability to pay their mortgage payment. When the operating expense pass-throughs arrive, so many tenants don't know what to look for, don't know how to review them, or don't take the time to review them. And sometimes you get a check associated with it. So you get the big package of calculations and you get a check on top of it. And because you got a check back, you don't pay too much attention to it. Of all of the years, it's always a good idea to review the operating expense true-ups very carefully. But in all of the years that you've been working with leases, this is the year to make sure that you pay particular attention, because this is unprecedented. As you go through that calculation, I will say probably 35–40% of the operating expense true-ups that I review have some sort of a mistake in them. And maybe mistake is a strong word. Maybe they are a different opinion about how things should be passed through. In a lot of cases, these true-ups are based on very wide open lease provisions. So there's a lot of individual subjectiveness to what gets passed through and what doesn't. You have some landlords that will try to pass through absolutely everything, and you have some landlords that are a little bit more fair, and you have some landlords that make mistakes and don't pass through expenses the way they should be. Of all of the things that you should be doing when you get that packet, this is the year to really go through it in detail. Talk to your accountant, talk to your attorney, but compare it to what the provisions are in the lease and make sure that the landlord has the right to pass these things through. And you always have the right to ask for backup. Again, this is a section of the lease usually. So one of the challenges is sometimes the lease will say you have the right to inspect the documents in the landlord's office. That might mean the property management office in the building that you're in. It might mean the property manager's headquarters in the same city, or it might be the property manager's headquarters halfway across the country. So be aware that the lease is going to tell you exactly what backup review rights you have. Understand what those are, and I do recommend that you put some time and attention into looking through those backup documents, and you'll get a chance to look invoice by invoice and see exactly what got passed through. It's a good idea to ask for a general ledger, and you can compare and kind of walk down the general ledger and compare it to the operating expense pass-throughs, but there's nothing like putting your eyes on the invoice itself and looking carefully. You'd be surprised how many times invoices are coded incorrectly, or they're sent to the wrong building, or there's issues with the invoices themselves, and that gives you a lot of leeway to negotiate with the landlord when you have the document in your hand. Chances are good that if you have a gross lease, you're most likely going to have gross ups in 2020. So again, in the best year, it's complicated to review gross ups. In 2020, it's really important that you go through the details. My suggestion for you, and this is what I recommend to my clients on both sides of the equation, landlords and tenants, is that whenever you do a gross up calculation, you should consider that gross up a temporary calculation until the building is stabilized. So, and the reason for that is, let's say that we do our gross up calculation, which is very much subjective, and we originally planned on the operating expenses to be $12 a square foot. But in reality, when we get to a stabilized occupancy, the expenses might be very different from that. They might be higher or lower. Maybe we were able to negotiate some better terms, or maybe expenses went up dramatically. But if you make an assumption of gross ups, because so much of it is a calculation on a piece of paper, kind of predicting what the janitorial costs are going to be and what the management fees would be if the building were full, and kind of predicting what the expenses would look like, there's a lot of room for error. There's a lot of room for potentially a purposeful change in the situation where somebody's trying to take advantage of the gross up calculation. There's all kinds of things that could happen. So a suggestion is that if you can get everyone to agree to it, try to make that gross up temporary until you have a year where you have good occupancy and are able to establish the number. And you know, it's very subjective, but it's a good idea to try to get it to be temporary. And if 2020 happens to be your base year, I would highly recommend that you talk about changing out your base year. I think the easiest way to do that is to ask to have your base year restruck to 2019. I think if you go back a year, I think many landlords are very comfortable going back and pushing the gross up backwards, because it theoretically is advantageous to them, because expenses increase at a certain amount each year. And if you push your gross up backwards, generally they're going to do better than if you try to push it forward. That's the cleanest way of managing the situation, is asking to do a lease amendment and ask for a 2019 base year instead. And I think landlords are going to be willing to talk about it, because again, 2020's numbers are just going to be like throwing a dart against the dartboard. We have no idea what the actual expenses are going to be. You also can try to move the base year to the future. So we'll say we're going to have 2021 as our base year, but I'm not convinced that the COVID-19 crisis is going to be behind us until 2022. So if you try to move to a 2021 base year, I think you're going to be really kicking the can down the road. And I think we're still going to have to play with gross ups in 2021. So, and also because anytime you move the base year forward, the landlord is going to have a little bit of heartburn about it. So my suggestion is, if you have the opportunity, consider an amendment to the lease to knock the base year back to 2019. I think that's better for everybody involved. Or we use the term base year because it is whatever the expenses actually happen to be for a particular year. So a 2020 base year means we have to wait for the end of the year to figure out what the actual expenses were. There's also a concept called an expense stop. So if you had that $35 lease, rather than trying to wait for 2020 expenses and having to gross up those calculations, you could ask for a base stop, and you could establish through a lease amendment that your base stop is going to be $12. And from that point forward, the gross up of the base year doesn't matter. All you're worried about is grossing up and what the actual expenses are in the future. So just recognize that there is an alternative to a base year. Base year meaning I have to wait for those expenses to be done, and whatever the actual expenses were in that year, that becomes my base rent or my operating expense component. I can also consider a base stop, which is just putting a number in there instead and saying the base stop is $12 or whatever the expenses are expected to be. In either case, no matter what happens, it's a really good idea to ask an expert. So engage your attorney, engage your accountant, engage a commercial real estate expert. Talk to people who know this stuff backwards and forwards, because this is going to be a year where it's going to be confusing for everyone, including those people who do this for a living. Also, in terms of COVID-19, there's probably not any language in your lease that relates to a global pandemic or the kind of shutdowns, government mandated shutdowns that we're in the middle of going through. So it's a good idea to review your lease and see what the parameters are and what your rights are under the lease. It's also a good idea to talk with your landlord and understand what they plan to pass through, because there's going to be lots of opportunities for you to really talk about fairness. And again, I want to emphasize, I'm all about fairness. And I think the best way to do this and build a long-term relationship with your landlord and with the tenant is to focus on what's the fair thing to do, because that will encourage people to stay in the building and renew their lease over and over again because they have a fair treatment from their landlord. Well, all bets are off, because in many years, we've got tenants who are struggling by their fingernails to stay alive, and we've got landlords who don't have enough cash flow to pay the mortgage. This is really a situation that really backs everybody up against the wall. So just recognize that there may be landlords who are unwilling to be fair because they have the possibility of having the building foreclosed on. So this is a great time to talk about it and understand what the opportunities are. There's also, the landlord usually has incredible pass-through rights. In many of your leases will say, for example, that any capital improvement that has certain impacts on the property, like reducing operating expenses, you can pass through the amortization of that capital project. So that means if you do a lighting retrofit project, you as a tenant could pay a portion of that for the next 10 years as operating expenses, even though that lighting replacement project was a capital expense. The landlord often has the right to pass that through, but that doesn't mean the landlord should, because it has an impact on operating expenses. So if anything, this is calculus, because if the landlord tries to pass that through, it may impact somebody's base year and make the base year artificially high. It may impact those tenants that don't have a base year, and it may get them to be able to pay more operating expenses to the landlord, but it may make the property at a competitive disadvantage because the operating expenses are higher than the market. So there's always room for negotiation. And even if the landlord has the right to pass it through, emphasize that you want to be a long-term tenant, emphasize that this will have an impact on your lease from this day forward, and it will impact every year of your lease from this point forward. This is your chance to really understand what you're doing when you go in for that negotiation, because if you save a dime today, a dime per square foot today, and you have 5 years left on your lease, that dime will likely transfer to the next 5 years also. So it's way bigger than that. If the property manager won't help you, and many managers are either in the middle of this or they've been specifically told not to release the data, if you're working with the property manager and you can't get information about the way these guys are going to pass things through, there's an opportunity for you to go higher. So talk to the senior manager, talk to the vice president, talk to the regional manager, work your way up the food chain until you get somebody. The goal is not to ask for what are exactly the expenses going to be in 2020, but hey, how are you going to treat these things? And what does your reforecast look like for right now? Give me a sense so I know how to plan for those operating expense pass-throughs in 2021. And if nothing else, you at least have the ability to start putting stuff aside so that you have money to pay if you think those bills are going to be much higher in the first quarter. But this is not necessarily about asking for the exact number, because we're not out of the woods yet. We still have a long time to go before we know what the rest of 2020 looks like. But it's about getting a sense of where you are so that you can plan accordingly. So we kind of crashed through that pretty quickly. So I'll open the floor up for questions. And Leonardo, if you and the team have questions, I'm happy to answer.
Thanks, Mark. Certainly a very informative and impactful presentation. And so let's see here. I am going to I'm going to start it off because there were a few questions that I had, just one in a general sense. And that was simply a matter of on the presentation, for those that either couldn't get it down or want to go back, and that would be, will the specifically the call to action slides, if they will be made available for those that are participating?
Sure, absolutely. I'll send it to you after we get off the call.
Okay. And then I think, I know you mentioned on there a couple of times where you said ask an expert. And so, and that was ultimately going to be one of my questions in the sense of some of these things, trying to figure out perhaps for those, which are things that you can do for yourself and which are things that you should have representation. Or do you get it? Yeah, so I'll just start there.
Well, I think that in a normal year, I think that a tenant can usually, and maybe if it's not the tenant contact, maybe it's the accounting department or the CFO, I think they can review the operating expense reconciliations and go through the general ledger and just kind of get a sense of whether the pass-through items are legitimate, and you get a sense of whether the pass-through is correct. I think that for the most part, we've moved from spreadsheets for operating expense calculations to using sophisticated accounting applications that tie into the building's accounting system. The challenge with that is that it doesn't give you, when you have a spreadsheet in front of you, you can see the pathway and how the calculation occurred. With the accounting applications, you oftentimes get just a report and you're not able to see, how did you get to that number? How did you create that expense pool? So I think if you can ask for more details, I think the CFO can probably go through there to a certain level. But I think it's complicated, and I think it is, this year especially is going to be incredibly complicated because of the complexities. I don't know that I think I would involve somebody even just to do a cursory review of the expenses. And I would say, if this is your base year, I think you would be, it would be absolutely incorrect to not have somebody look at it if this was your base year. Because that's, once you establish that base year, that's going to be with you for the rest of the term of your lease. And if you make a mistake in that base year calculation, it will follow you for the rest of your lease and you will overpay for it.
Wow. And just maybe one final question, and then we'll actually need to wrap up. Fortunately, I've myself got to jump on another call immediately after this. But you mentioned about the fact of leases often having something in there that speaks to the fact that if you wanted to inspect the documents themselves, how you could either go to the property management office or, but that it will state specifically where you might go. But, and this, I guess, so maybe a couple of questions on this related note. One, what if you're in a building where, let's just say the property management isn't on site, but two, if the offices aren't open and they're, in this day and age where so many people are still working remote, or if the corporate offices are out of state, how do you, I guess, perhaps maybe make that request, or how might those things be handled in the event that management isn't on site, or if it's out of state, you can't actually get to them because of COVID-19?
I think there's, again, I go back to, I've spent my career focused on fairness, and I don't have an issue, especially with the accounting systems the way they are today, and the fact that invoices, when they're paid, are scanned into the system. So it's really easy to send a report to somebody that shows the general ledger plus the copies of the invoices. Mm-hmm. So in the issue of fairness, I've got nothing to hide. I'm not trying to do anything inappropriate with these expense calculations, so I'll give you the entire packet. But most of the time, that's not what the lease says. So if you have a property manager that's totally above board, they will most likely be fair, and they'll give you the benefit of the doubt, and they'll provide the additional documents, and they may just scan an email or provide them in a Dropbox or whatever. They'll be very open and transparent about sending that information out. There will be landlords who are sticklers for it. And if it says that the only way you can see them is to go to their office, then that's what they're going to expect you to do. And unfortunately, there are landlords who are going to do that. It would at least, it doesn't necessarily mean they're being obstructionist or that they're maybe not doing things above board, but it certainly raises the hair on the back of my neck to say, wait a minute, why are these guys making it so difficult to look at the documents? It is also very common that you're not able to take copies of the documents, and you're not able to remove anything from the premises. So a lot of times what they'll do is they'll set you up in a conference room, and they'll put the 12 months of expenses on the table, and you'll be able to flip through the expenses. You won't be able to make copies, but with phones today, you can take a picture of it, and you'll be able to look through the documents. But generally, the landlords won't make the copiers available to you to make copies of stuff. So it really just depends. You have to read the lease, and then hopefully you've developed a good enough rapport with your property manager and the asset manager that you can find a way around it.
Excellent. Well, Mark, thank you for, again, sharing your insights and expertise with us today. I think this has been great. Again, it's been, highly informative on this end, and I hope all of our attendees have certainly learned something, and that this will also help them in regards to their business operations. Certainly, you see on the screen Mark's contact information. Certainly do not hesitate to reach out to him if you have any questions. And I know that if he could assist you, he'd welcome to talk with you. He also has a highly informative newsletter that goes out about maybe as frequent as every 2 weeks, as infrequent as once a month. So he doesn't inundate you with emails, but certainly it's highly informative, and certainly encourage you to visit the Chamber's website for future events and webinars and so forth. So again, thank you all. Thank you, Mark. Thank you to our annual partners, and I will see you all soon.
Thanks, everyone. Have a nice rest of the day.
All right, bye-bye.